Hello, this is Mike Swanson of WallStreetWindow.com. Stocks are taking a tumble today as I'm doing this video. It's almost 3 o'clock Monday, August the 22nd. The Dow down over 600 points. The S&P down over 90 at the moment. I'm going to talk about that in a few minutes. First, I want to talk about mining stocks because I really haven't said that much about them lately. We saw a tremendous rally in mining stocks in the first quarter. They rallied as the stock market fell, in fact. And then the war in Ukraine happened and mining stocks launched up even more, but then they peaked out about 8 weeks after that and have been in correcting ever since. And even with the recent stock market rally over the past 2 months, just about, the mining stocks continue to go a little lower. In fact, last week on Friday, Newmont Mining made a new low. However, today, with the Dow over 600 points, Newmont Mining is actually up and the GDX is down 0.5% when the major market averages are down roughly 2%. So today's action in that respect has been positive for the mining stocks. But I want to talk about what it will take to get me to actually get really excited about them and really bullish and recommend, that they're going to do really well. And first of all, let's take a look at, and when I say when I think they're going to do really well, what I mean is I analyze the markets in a roughly 6-month time frame. I think they're going to be great investments for the next 10 years. But in a 6-month time window, I think of that as a period to adjust your accounts, to rebalance, or to buy or to sell, when you have peaks or bottoms. But here is the GDX gold stock ETF. As you can see, it's come down. Now, my favorite indicator when it comes to the GDX, it's really the GDX divided by gold ratio. And I have that right here. You see, typically, what this ratio measures is the performance of the mining stocks relative to the metal. And what that means is when the mining stocks are going up or outperforming gold, this ratio will go up. And it tends to be a leading indicator. And this ratio has been going down since the middle of April. And interestingly enough, the ratio actually peaked out a few days before the actual peak in GDX. So this ratio, as it stands now, is not signaling a bottom for the gold stocks or gold itself on a short-term basis. However, the ratio is starting to hold up. And that's a positive sign because typically when there is a correction in gold, what will happen is this ratio will fall fast as the correction begins, and then really towards the end of the correction start to go sideways. And that's really what it's been doing since July. So on one hand, that's a positive sign. And in fact, if gold were to start to go down and this ratio were to go up, which it's doing today, but if it did that in a dramatic fashion, I would take that as a buy signal for gold and the mining stocks. It'd be a positive divergence in which the mining stocks are holding up while gold is going down, or even better, going up while gold is going down. That's a powerful signal if you're timing the gold market. But there's one thing that would get me really, really excited about gold stocks, and that is another ratio, the GDX divided by the S&P 500 ratio. And this ratio surged in the first quarter because gold stocks went up while the stock market went down. Now it's been going down in the recent weeks, even with the stock market rally. And as a rule of thumb, when the stock market rallies, sectors that lag the market can become vulnerable when the stock market has its next pullback or decline in a bear market, which is to think we're in a bear market here. And you want to be very cautious on such sectors. However, once the stock market starts to decline, sectors that hold up during that decline tend to lead on the next rally. And if they start to hold up as the market is going lower, that provides a fairly safe entry point in such sectors. And so that's really what I'm looking for. I'm going to be watching very carefully how the stock market performs in the coming weeks. And if this ratio goes sideways as the stock market declines, I will then start to get very excited about the mining stocks and the price of gold for that matter too. And frankly, I think that is going to happen at some point before this year is over. So I'm expecting to return to becoming extremely bullish on the mining stocks before the end of the year. Now, if we look at the S&P 500, we're taking a hit, not down 91 points, following a down Friday. And I think the market is very likely topping out. What we have seen is a rally into resistance, a rally into the green line, which is the 200-day moving average, which tends to act as long-term resistance within a bear market, which is what I believe we're in. And I've drawn 3 circles on this chart to compare what's happening now to what happened on the last 2 significant peaks in the U.S. stock market. When the market peaked out, it took a big hit, and then it had a bounce back up. Sometimes that bounce happened in just 2 or 3 days after the initial decline off the high. In April, though, the market really faltered for a week and then held up, tried to hold around the 50-day moving average, and then boom, turned down lower. That could happen. I'm not really sure exactly. I'm not trying to predict it. I'm just trying to suggest to you that we'll probably see a 1 or 2 day bounce at some point after these 2 hard drop days, down days here. The bounce could happen tomorrow. It could happen next week. It's a very difficult environment though now for stock market bulls. It's been a difficult environment all year. Look, 2 weeks ago, I read an article in the Wall Street Journal analysis of brokerage accounts of hundreds of thousands of individual investors. And even with the stock market rally that had taken place, and we were actually a little higher than where we are now, the average person was down 22% for the year because we're in a bear market. And because the stocks that so many people are trying to trade or hold on to were past fad stocks of the past 2 years, stocks that are widespread holds that dominate the ARK ETF, for example, which has lagged on this rally, as most individual investors have. So I'm just watching the action day by day. I'm not, I think it's time to be really cautious on these markets, frankly. We rallied into resistance when the market's in a bear market, and that's the time when it's good to do some tax loss selling. It's good to raise some cash. It's good to be, get more cautious, and so forth. So, but what we've seen in the past 2 weeks is people do the opposite. We've seen a literal mania in meme stock trading. I did videos about that last week. There is a day last week in which Best Buy was the second most bought stock among Fidelity account holders. That's absolutely amazing. And AMC was in the list. And what's happening today? AMC is crashing, down 40% today. AMC total collapse. Yes, it rallied up from 10 to 27, from the June low to the August high, but all the gains are giving up right, in 4 days. So that's how destructive this stock market can be when you're in a bear market. We're in a bear market, and it's tough. And don't let anyone kid you telling you that it's easy to trade. It's not. And it's very difficult to be a stock chaser or rally chaser. You get caught up in these tough situations. Look what happened to all the people that got excited about Best Buy. Crash. It was $26 4 trading sessions ago. Now it's below $10, just like that. Total oblivion. Remember a couple weeks ago how Meggle was a big rally stock? It opened up and then rallied up to 260. Well, now it's at $11. Total oblivion for all the people that got caught up in the hype on that stock. It's a company that's, that was the one that Michael Burry was making fun of people for buying. He was right. And Michael Burry, what did he do? He liquidated almost his entire portfolio according to his SEC filings that were released exactly a week ago. Timing was right. Listen to the experts like him that are real winners with money that they are investing themselves and trading themselves in the market. When he made all the money in 2008, the billion plus, that was the bulk of it was his own money at work. He's not a money manager like Kathy Wood, who's gambling for other people's money and makes money with fees. No, he makes the bets. He puts his money where in what if he's wrong, he's going to lose. His own money. Big difference there. So what do you do in these type of markets? Well, as I said, you have to be cautious. You don't chase rallies. You don't just buy something because you got your app on and it's up on the app, and all these other people are, herding into it. No, you've got to have strategies to navigate these markets. Now, I think we'll probably get some sort of bounce, and I'll talk about that in another video about, trying to bet against markets, because you can do that too. You can short stocks, you can buy put options, you can buy short ETFs to make money on the downside, or hedge. Use those as instruments to hedge, which is something I have done from time to time in these markets. And I came in this year 50% short, in fact, much of that taken off before in June and July, but I may put some of that back on. But here's the thing: what if you want to go long? What if you don't want to do that? It's kind of bets against things. You just want to go long. You just like going long. You like betting for stocks, not against them. Nothing wrong with that. You just have to have a method. And let me tell you, I've got one. I call it the twofold formula. It is the single best trading pattern I've ever used since I've been trading the markets since the 1990s. And I've got a free PDF for it. You don't have to buy anything. You don't have to give me a credit card and some free trial. No, it's completely free. It's a simple link to the PDF file. How do you get that link? Well, I did a video about it, and I'm going to link to that video in the description of this video about the twofold formula. Find that in the description of this video, watch that video, and then you'll be able to get the link, and you'll arm yourself with a simple pattern, and the PDF explains why the pattern works. That's what you need. Knowledge of why what you're doing works. That's how you develop a strategy and have the confidence to implement. And that's what I'm about, trying to help you become a better investor and trader in these markets. I do videos on real estate, news, politics, history, trading, investing. If you want more of these type of videos, hit like. Now, if you want to get my next video update, hit the subscribe button, then hit the bell next to it. YouTube will send it to you. I'm likely to have one out tomorrow about the stock market action and what to really make of this recent rally that we've seen. So all I said, hit the subscribe, hit the bell, and I'll be talking with you later.